Happy Tuesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Tuesday, September 19th, 2023. We'll start with today's key macro event, which is investors should continue waiting to extend duration in the fixed income market. So asset markets continue to consolidate ahead of the FOMC tomorrow, where investors may be forced to choose between celebrating a possible hypothetical rate cut from the 2023 dot plot and bracing for a fresh higher for longer message in the 2024 dot plot. In our view, the BOJ meeting Friday has the potential to cause more headaches for global fixed income investors, given where the Japanese economy is in its growth, inflation, and tightening cycles. Persistent, well above trend nominal GDP does not jive with the central bank struggling to defend a negative interest rate policy amid a renewed bout of fresh cost plus inflation from the energy market. So that, again, as always, that's a little excerpt from our lead-off morning note this morning. Obviously, need to subscribe to get the full research note and obviously the important market implications and key takeaways in terms of what you need to be doing with your portfolio. But we'll transition to our daily review of cross-asset performance. We'll start here with the equity markets. So S&P 500 down 1.1% on a week-over-week basis. You got energy and utilities leading to the upside at around 1.5-ish% apiece. Tech leading to the downside here at minus 2.5%. So you're still seeing those violent rotational flows in a market that continues to be confounded by declining liquidity on a trend basis. I've heard everyone talk about liquidity going up, liquidity going up, liquidity going up, but we here at 42 Macro have been the only firm on global Wall Street that called out the negative inflection in global liquidity in real time at the year-to-date highs in Bitcoin back in April, and we've been persistently reporting on that negative trend since it has yet to inflect to a positive trend in terms of global liquidity, although we have seen some green shoots in our 42 Macro net liquidity model. Shifting gears to our fixed income markets, we got fixed income, the Barclays Ag down, basically flat on a week-over-week basis, heading into this gauntlet of central bank meetings, leading to the downside here. You got BWX, that's international treasury bonds, leading to the downside at about 0.7%. That's largely due to the currency market, which we'll touch on in a second. In terms of commodity markets, you got commodities still rising at a plus 1.6% on a week-over-week basis. Those are being led higher by uranium and led higher by USO, so energy, so crude oil, uranium. The energy sector continues to, really drive inflation expectations higher in our global macro risk matrix. We had a bullish VAMS breakout in the 10-year tips break even in terms of the 42 markets that we track on a daily basis in that system that helps us identify what the top-down market regime is and how investors should be positioned in their portfolios as a function of that. Shifting gears to the currency market, we continue to have dollar strength up 0.5% on a week-over-week basis. In terms of what's leading the currency market higher, you got Canadian dollar up 1.3%, dragged higher by this sort of energy trade here. So you're seeing currencies that have energy exposure within their economies in terms of their sectoral exposures, obviously leading the currency market higher. You're seeing currencies like the British pound, the Japanese yen, the Swiss franc, and the euro, currencies that are all net energy importers, really taking it on the chin here on a week-over-week basis, down anywhere between 0.5 and 1% week-over-week. And then lastly, in terms of crypto performance, you got Bitcoin up 8.1% on a week-over-week basis. That's being in terms of the broader crypto beta. You got the XSO Solana is up 8.9% on a week-over-week basis. And in terms of what's dragging to the rear here, what's the green line here? Dogecoin, our friend Dogecoin is leading to the rear. So this isn't really a real big move in terms of liquidity. In terms of you're seeing kind of what we call poop coins leading to the upside. It's not as particularly pro-cyclical push in the crypto market there. So just be aware of that. It might just be something going on in terms of Bitcoin. And then lastly, transitioning to my Longbow dashboard here in terms of the trading range view. Not really much to call out from the perspective of the main markets across global macro. So we'll leave you with some S&P 500 levels to get your day started. So we're at 45.66 at the low end of the range, a narrowing range, I might add, that 45.32 top side of the range there. So we'll wrap it up there. Darius Dale presenting our macro minute for Tuesday, September 19th, 2023. Best of luck out there today. We'll catch you back here tomorrow. Cheers.